Hey, what's good, everybody? Welcome to the Closing Beat. Happy Thursday. Hope you're having a good day here so far. This is our stock market update show that we do just to cover the basics for you, right? We cover the markets, the good, the bad, and the ugly. And so if you have questions, I'm happy to try to help as we go along, but I've got a lot to cover today. We're financial advisors here at Jazz Wealth, and so we focus on not only investing for you and helping you with your overall net worth, but we want to teach you as well. So we're always teaching how investments work, how the process works, how everything really goes as far as investing, so you can learn as much as possible. And so we'll be doing that tonight in our Wine and Wealth class. It'll be tonight for customers. That starts at 8 o'clock. You guys already got the invite for that. And we're going to cover where do your orders go? Like when you buy and sell stuff, what's going on there? Like who sells to you and who buys to you? I bet you don't know the answer. It's a whole lot different these days. So give you a little bit of a history lesson, maybe show off a prop or two, and we'll teach you something new. So I hope you'll check that out. If you are interested in Jazz Wealth, of course, maybe you'll check us out at jazzwealth.com. Let's get started. We've got a lot to do, and by the first thing I want you to do is I'm going to just say this one more time. I've said it 3 times now this week. I want every one of our customers to go into the dojo. That's our private little dashboard for customers. It has our videos, classes. It also has what you're seeing right now, the markets and different ways you can take a look at the stocks and everything that you may own. I want you to print out this chart, our customers. I want you to print it out, cut it out, slap it on something that you look at every day. I keep talking to people that said, Dustin, I sold. I panicked in December down here. I sold, and now when do you think the markets are going to pull back? I'd like to get in now that I missed out, right? Now the next drop, I won't be scared, but for some reason I was scared here, and I want to get back in. I want you guys to remember this, that look, markets recover. You want to be a part of it when they do recover, so be sure to take a look at that. That was the worst decline, or worst December since 2008 in there, so I can't blame you for getting a little nervous, but our customers, we walked you through every little bit of it there. I can't believe how many people are still on the sidelines there. Wow, that's a tough one to sort of swallow. Anyways, let's take a look. S&P 500 today, basically unchanged. Nothing, really. Zero change on the day. Back and forth was like a point lower. That's really not that big of a deal. The Dow, lower by 0.5% today. That's all because of 3M. 3M, believe it or not, accounted for all of the 133 points lost today in the Dow, plus an additional 50 points, right? So 3M took the entire Dow down plus an additional 50 points. If 3M was flat today, or I'm sorry, if the Dow was flat today, it would have still taken 50 points off of it there. Incredible, right? We take a look at 3M. It had its worst day since 1987. Had to go all the way back to 1987 to find a 13% down day. Basically erased the last 3 months worth of work all inside of one day. We'll cover that here in just a little bit. Here's some of the things you might want to know for today. 100 names have officially reported just this morning. Right? So 100 names reported. There's been 175 names in total out of the S&P 500 that have reported already, and we're maintaining that 78% beat rate, meaning 78% of the stocks that reported did better than what Wall Street was expecting in terms of earnings. Yesterday, we had 49 new highs, new 52-week highs in the S&P 500, which I mentioned was pretty good considering it was sort of a whatever kind of a day. Today, we had 20 new highs, and we were basically negative. Look at the chart there. We started by selling off earlier today, so did a little research. This is a record, by the way, within the last 10 years. 409 stocks in the S&P 500 gapped lower today. Give you an idea what a gap is? A gap is exactly what you saw on 3M today. It's when the stock price closes at one price and opens anywhere under the closing price of the previous day. So that's a gap. You've got a huge gap in the stock price. You can look back over here and see a little tiny gap to the upside, a little tiny gap to the upside and downside. Obviously, this is a mammoth one, but 409 names in the S&P 500, or 80% of the S&P 500, gapped lower. Not that it like sold off, it gapped lower, so really incredible there. Now, as far as the S&P 500, a little pricey here, right? If you're a fundamental investor, you look at the S&P 500 and you go, okay, we're trading a little rich, right? From a forward PE perspective. We're at 17.67 forward PE. Historical average is 15.7, so you can see about 2 points overpriced. It can get more overpriced. I'm just saying in the short term, we're getting a little bit pricey. And remember utilities, as soon as they got to being overpriced here, had one little burst higher and then they started to take a break. Investors were like, look, I'm just not going to pay that much. It's no different than when you're selling a house or something. You can put a price that maybe is a little high and someone will come along and buy it, but if you put it too high, eventually you have no buyers, nobody's interested, and you basically just kind of tread water. So that's it. Now, sectors that still are pretty cheap, you got basic materials there. XLB is the symbol I'll take a look at for you there. Still trading fundamentally relatively cheap, around 14 forward PE there. Healthcare, I think, is a no-brainer. If you've been following along for a while, you know that that's trading a little cheaper than normal, trading at 19.6 forward PE. And financials, that's just one of the other sectors that's currently trading a little bit cheap relative to history. It's actually near its yearly lows on that one. So that's basically what I'll point out there. Look, hey, earnings. While that continues to be a big focus, something that people may have missed today was initial jobless claims. They actually spiked a little higher, 230,000, which was 37,000 more than expected. That's the biggest it's a weekly number that comes out. That's the biggest weekly increase since September of 2017. So maybe something that catches the media's attention a little bit later, but as of now, not a big deal. And everybody kind of looked the other way. The short story of all of that is there are a bunch of good reasons for the markets to pull back in the short term. It just didn't do it today. I'll even add a few more reasons here in just a moment. Tomorrow, you got earnings from American Airlines. So American Airlines sitting flat there. You got Colgate Palmolive tomorrow, Chevron, ExxonMobil, and a whole bunch more. I'll cover those as we get to the end. Let's look at a few of the sectors today that maybe caught your attention. Industrials a little lower, down by 2% today. That's really 3M, right? So this entire move today, the entire 2% drop is because of 3M. It was just hinting at making new record highs. We talked about this here last couple days. It was trying to do it, but 3M took it down there. I want to point out the dollar. I'll give you an interesting story if you got a moment. The dollar breaking to new highs here, and you go, is that good? Is that bad? What's going on there? The U.S. dollar, the last... Well, can you see it? Yeah, the last 3 days there, that's its best 3-day run in about 6 months. So the U.S. dollar is getting stronger and stronger and stronger. I want you to just think for a second how that affects individual stocks. When the dollar gets strong, your small cap domestic stocks tend to do really well. Companies that get a lot of their revenue here from the United States tend to do well on a strong dollar. Who doesn't do well is your international companies that are overseas, getting a lot of revenue over there, but also getting a lot of revenue here in the States as well. Now, you would expect that with the dollar as strong as it is and getting stronger, that would hurt the international stocks, your Intels and things like that are sort of global, Caterpillar, and you get what I'm saying. But that's not the case. Right, currently the global stocks are beating the small cap stocks, and I've pointed that out as we've gone here. The Russell 2000 being a little bit weak, not really playing along. What gives? Well, you can look at that in a couple different ways. You could say, well, the strong dollar will be a sort of a tailwind for the small cap stocks, Russell 1000, Russell 1000 basically. And you could say that from this point, now that the dollar continues to get stronger, that's going to be pressure on the international big stocks. Unfortunately, those have a bigger weighting in the S&P 500. So if the dollar stays strong, I'm just saying, this is not individual recommendations, but picture that. If the dollar is as strong as it is and continues to be strong, where should you be looking if you're a short-term or position type trader, or maybe even a little bit more active? Where would you be looking? The domestic names, companies that get the bulk of what they have in terms of revenue from activities here in the U.S. What names would those be? I did a little research. CVS, the little corner store, CVS Caremark, Kroger, Sprouts Farmers Market, they all get 100% of their revenues from here in the States. You'd expect them to do pretty well, wouldn't you? Clorox, Hershey, Constellation Brands, that's alcohol, Smuckers, they all have more than 80% of their revenues here in the States. On a strong dollar, that has historically been something that helps support them while the global stocks sort of pull back there. So remember, the small cap stocks have been struggling here. This could be that sort of extra bit of good news that it's been looking for there. So I don't know, just a little bit of a lesson of the day, if you will. Semiconductors pulled back on the day, 2%. Totally fair. Mentioned this yesterday that they're getting a little extended. It'd be normal if they pulled back on the day. Xilinx was one of the reasons. We covered that yesterday when they reported their earnings. There you go. Xilinx finished the day down 17%. Rather pricey stock, so kind of understandable there. This stock, by the way, accounts for 4.5, almost 4.5% of the SMH, right? So you can kind of understand a little bit of weight there. Also, Lam Research, LRCX is the ticker symbol, up 5% on the day. So I've mentioned this the last couple days. We said Taiwan Semiconductors in the space there, they said that the slowdown in the chip space is done, right? That everything's good. Texas Instruments said, maybe another quarter or two. Lam Research said it's going to be the rest of the year. So these guys are all over the place, which gives you an idea of, who's really getting the bulk of the business if this is if this slowdown is coming to an end for the chip space. VIX, can I pull up VIX here? I don't know if I have the data for this one. There we go. VIX was essentially flat today. I thought that was kind of interesting. You had a day where the market sort of jolted to the downside, had a hinting of maybe wanting to break a little bit in the short term, and VIX basically did nothing there. So that's really all I'll do in terms of sector-wise. You can go through the different lists there if you're in the dojo and play along. Let's go on to stocks, because I hope you got a minute, because we got a ton of stocks here to go through. 3M. We mentioned this a minute ago. It missed expectations by 26 cents. So not a little beat, like we just kind of had, it's not a rounding error. They missed by 26 cents, revenue lower than expected. And they said, which this is going to be the first company out of the big Dow stocks, they said they're going to cut about 2,000 jobs. They flat out just said, that was a disappointing quarter and we just don't see it getting any better. So we're going to cut 2,000 jobs. I thought that was kind of interesting. Southwest Airlines didn't finish above the 200-day, but earlier did break above the 200-day moving average. They beat on earnings by 9 cents. Profit was lower overall, and this is the 737 MAX grounding there. Everybody pretty much baked that in. I think that's why you see the stock a little bit higher today. Didn't finish very strong, but you see what's going on there. Tesla moving. Hey, here's an interesting thing. Look at this. Tesla broke below the 250 area today, and what happened when it did? Everyone was looking at the 250 number. We've mentioned this numerous times as being a long-term support. Notice that the second it breaks under that, strong volume, aggressive push to the downside, everybody's now looking at the 240 number, which I kind of, after today, it sure feels like it's going to go through 240, but everybody's looking at that because there's a lot of analysts right around the 240 number. The company, by the way, if you're paying attention to this, the company missed on earnings by a mile, like let's just say 2 miles, right, to give you some sort of perspective there. They missed by $2.21. So not just kind of a miss, but a massive miss. If this were any other company, this would have been the only thing anybody was talking about today because it would have had that big of a fall. But because of Elon Musk and the whole, what do they say, the sort of cult-like following that they have on this stock there, unbelievable. Now, they said we should be profitable here again in the third quarter. They're doing a lot of cost cutting. I've tried to bring it up every time they mention something new that they're doing there. So they're giving it a shot, but Tesla looking very weak here in the short term, obviously had a bad day. Microsoft broke to new highs, 3 1/3% on the day. We reported this yesterday. They beat on earnings, beat on revenue. The 73% increase in Azure, if you want to say it fancy like, was the big focus. Now that gave you a hint as to Amazon, right? Amazon reported earnings here after the close. They beat on earnings by $2.50. It's like they took all the money from Tesla. So huge beat on earnings, a beat on revenue. However, the company's already sort of let you know we're gonna do some spending here to keep growing. They closed like factories or fulfillment centers in like 4 different states and told employees to come back when we have this figured out because they're putting robots in there, by the way. So slower growth there, but everybody pretty much expected that. The hint that you got from Microsoft, you could have looked at the AWS for Amazon. AWS higher by almost 8%, so not bad there. That just came out. I'm going to try to grab all of these for you, and we'll see if we forget anything. Intel earnings beat. Stock is much lower here after hours. They beat on earnings, beat on revenue. They guided lower for the second quarter and guided lower for the full year. So not good there, right? So you have chips for cell phone. Well, they don't do chips for cell phones really anymore. Chips for computers and chips for servers. Chips for servers is always the one that everybody looks at. That one saw a little bit of a decline there, and so stock is pretty much lower. That's not going to help the semiconductors tomorrow. Starbucks here reported earnings beat by 10 cents. They basically met revenues just a touch off there, a little bit lower, but not too bad there. They guided positive going forward. Looks like they had 4% higher sales in the U.S. By the way, that's is that 3 quarters? Nope, that's 4 quarters in a row that they've seen that growth in the U.S. Interesting. 3% higher in China. I just thought that was interesting. I put that down there because their biggest competitor in China is filing for an IPO here in the States, by the way. They're not really a competitor of Starbucks. I should do a video on them. They're kind of like the Dunkin' is to Starbucks. So everybody's like, oh my God, the Chinese Starbucks killer. No, it's definitely not the same thing. Rewards members, that was a big focus as well. They keep adding to their rewards members. I didn't get into the numbers there for you too much, but all looking good there in terms of rewards numbers. They did miss on revenue, though, by just a touch. Mattel sold off today, but sharply higher here after hours. They beat on earnings. Remember, they're still losing money. So they beat on earnings. They lost 44 cents versus a loss of 56 that everybody was expecting. So it's the reverse. Analysts sort of lowered even further the expectations of a loss. They beat on that. They beat on revenue. The CEO looks like he's got some comments here. All in all, to summarize real quick, just he says that turnaround that they're working on is very much on track. Everything's looking really good. I don't see one negative comment from the CEO. T-Mobile reporting earnings beat by 15 cents. Okay, pretty good there. Revenue better than expected. They guided higher. They added 1.7 million new paid subscribers there to their cell phone plan there. That's a 15% quarter-over-quarter growth, so looking good. Ford, normally I go into these more deeply for you guys, but hey, I'm still working on it. There's so many to cover. Ford beat on earnings by 17 cents. That's a big beat for Ford, by the way. Beat on revenue. Looks like revenue was good everywhere except for China, but you know what? I don't think that's actually a good thing. Revenue improved a little bit there in China, so yeah. Still not good, but they're getting better over there. China is not a very profitable place for them, if profitable at all. Highlighted here, Ford Credit. Whoa, let me make sure that's right. Ford Credit came in at $800 million. It was $100 million last quarter. Was it not? So Ford Credit, that's the big focus there. If you're looking at the earnings and you're kind of wanting to dig deeper, look at Ford Credit. If that's true, if that number is not wrong, that's a huge increase for them. Anyways, stock higher. Chipotle, earnings, beat on earnings, beat on revenue. We talked about this one already. The stock is very expensive, by the way. Very, very expensive short-term price there on the stock. 100% increase in digital sales. You know, you order your taco and you go pick it up without having to wait in line. Looks like they talked about the subpoena in Illinois for the case on, they just can't shake that, man, that E. coli outbreak. So that's probably reason for a little bit of the pressure today. I didn't dig too much deeper into that. Facebook, we talked about this. I think here's interesting. So it gained 6% on the day, beats on earnings, beats on revenue. The ads that they run in the stories, the thing that they just flat out copied from Instagram, which is fair because they own it. They're seeing growth in the ad space there, so higher overall revenues. At the highs today, so almost to 200. 200's a known sort of sticking point there. At the highs, Mark Zuckerberg's net worth was $4.5 billion higher than it was yesterday. So at the highest price today, he had a net worth that grew by $4.5 billion. Well done, sir. United Parcel Service, also known as UPS. What can Brown do for you? Sold off 8% today. That pulled butt. That's going to hurt your transports there. If you were looking in the, IYT, not XYT. That hurt the transports down 2.33% on the day. I think I got it all. I don't know. That might be a record for me, covering that many stocks in a day, at least trying to get over it there. If you have any questions, I'm happy to try to answer them. I'll go through them with you, and then we'll send you on your way. Not bad. I thought that would take a lot longer. Tesla's jealous. Yeah, right? Oh, man. If there was an Elon Musk at 3M, they maybe wouldn't have done so bad, but unfortunately there is not. AZ says, are there any training instructions on the difference between profit sharing plan and cash balancing plan? My wife's medical facility just added these two plans. I don't have anything on that. I usually don't cover those types of plans from a general perspective, just because they all are just a touch different depending on what company you're at. So it'd be more of a one-on-one kind of a thing. Vishal says, is Tesla a buy now that it's below 250? We talked about it there. I think you have more downside. Not that I'm telling you to buy it or sell it. but by it breaking under 250 today, think about all the people that are going to come home and have been relying on that 250 number, using it as their line in the sand. There's likely to see some more sell orders in there. So I don't feel like there's any rush. If you understand what climactic is or parabolic, that's my assumption. Just my assumption, my opinion. I think a parabolic drop to the downside, or a climactic drop, waterfall drop, whatever you want to call it, to the downside. We'll keep covering it there. Yep. Jake continues to say, I'll buy Tesla when Elon Musk leaves. It'd be a sub $100 stock if he, for some reason, walked away and was no longer a part of it. I'd say it'd be a sub $100 stock even if he took a back seat, right? Even if he was still with the company but took a big back seat, I still think it would be a much cheaper stock. Yeah, you're making the comments about the valuation there. Hey, I agree. I have to agree with you there. About time Ford goes up. Yeah, doing great actually after hours here. So getting a little bit of a spike. They did. If that Ford credit number is really right, maybe we'll try to follow up on that. But I don't see why it'd be wrong. I don't have any reason to doubt the numbers that I have here. But wow. Any comments on all those videos continuing to predict a market crash and the country's printing money to support the market? No real comment. I mean, there's always people that make those sort of assumptions. What are you going to do? I mean, there's always someone that's going to have a contrarian view, and then the contrarian views get very extreme. There's also people that say the market's going to double in the next 10 years, and that would be an extreme view on a trend side of analysis there. So, give me some reason to start to believe that, and I would work with you. But I kind of want to work in the moment and work on the stats, work on the statistical sort of analysis that we do here, rather than just say, oh, that's a bad thing that these countries print so much money. Oh, Venezuela and Turkey. I mean, you want to get into some real theory there. Look at Turkey. Holy cow. But yeah, there's always one of these things to talk about. I'm just not one of those guys. I want to kind of follow what's going on. Christopher says, what are your thoughts on investing in a Roth 401k versus a traditional 401k for high income earners? Because you never know what taxes are going to be. Maybe split the difference. Without giving you specific advice, my comment is always to go with the known versus the unknown. And we know that that's a tax-free approach or a post-tax way to invest. We do not know what the tax rates will be in the future. And anytime you're investing your money, right, and you're going to put $1 to hopefully grow it to something in the future, you go with as much of the known versus the unknown as you can. It's a simple way to look at it, but something you should look at. Cigna, yep, recovering a little bit there with the healthcare space. Nice little recovery in healthcare, by the way, now that old Bernie Sanders is going and talking about something else there, so good with him. So the comments about Merck, Pfizer, and AbbVie, I don't really follow that sector. I hate the sector. I hate biotech. You notice how I don't even really say biotech anytime at all. I don't like it. I don't like the sort of guess what law, guess what FDA approval will come through, guess what company will buy the other one and then cancel a drug out of nowhere. I don't like that. That one's very, very tough to follow. I'm sort of a believer that if you're going to invest in a biotech space, you almost need to be a specialist, right? It's so tough. And to give you an idea of who is really not a specialist at it, the Big Four are paying now $3 million for biotech analysts if you have the expertise. $3 million. That, to give you an idea, that's significantly higher than most analysts get paid because nobody really understands that space or takes the time to do it. Xilinx, is it a buy now after it lost on earnings? I have one general rule. I'll continue to say I'm not giving specific advice just because I get in trouble for this stuff. But my rule is very simple. You never buy the first day of a reversal. So what happened with Xilinx? It was trending. Here, we'll just show you. Xilinx was moving higher. Everything was looking good, right? It's moving higher, higher, higher. Today is the first reversal day. You never buy the first reversal day. Just a personal preference of mine. Anytime a stock makes a move and then reverses, whether it's upside or downside, just don't do it on the first day. Give it a break. Let it relax a little bit. I use the analogy of someone falling off a 10-story building. You don't just get up and walk away after falling off a 10-story building. There's a repair period, right? There may be more selling period and then repair. So it's usually not something you need to rush to buy into. If you disagree, dive in, have a good time, but that's just my personal sort of general view given the years of experience trying to be a contrarian type trader. So anyways, that's that. Facebook, we covered that as far as the earnings perspective, earnings sort of view of that one. $200 is a known sort of resistance area. And given that it's extended in the short term, totally cool if it starts to pull back. Today, that was all your day traders and short-term profit takers in there. That's a very, very popular day trading strategy for what happened on Facebook today. So I'd let it breathe a little bit before you make any adjustments if you're thinking about that. Yep. And then finally, we'll do ATVI. It's unfortunate. I know a lot of people that believe in this space and everything, but snoozer, right? Just absolute snoozer of a stock there down near lows. I like the discount. I think you got room for a little bit more of a discount, but I would just say it's a watch, right? There's no reason for any analyst to go crazy for it. You do have a little bit of the catch play. If you're familiar with technical analysis, in the short term, you got the catch play, so that leads to short-term little spike there if you're a real active trader. But long term, I don't have a great reason to say this is where you build a position. Just not feeling it. Relative weakness, right? We covered this on Monday. Was it Monday? Yeah, Monday. Relative weakness. You got the markets moving higher. You got this stock not participating at all. What happens when the markets move lower? Every trader will look for relative weakness to go make money on the downside, and they're going to pick on these stocks that have not bounced at all. Yep. Wow. Do you think American cars will disappear anytime soon? What? Where are they going? I've never thought of that. Will they just disappear? No, I can't predict that at the moment. Yep. Cool. All right, well, I appreciate you guys watching. Thanks for hanging in there with me. I know it was a busy day today. Just so you know, today was officially the busiest day. We've been talking about that all week as far as earnings go. What do we have here? Tomorrow, we got the GDP numbers at 8:30. That'll be out before the markets open. They missed last time, but the market was higher by 1/3%. So there you go. If GDP numbers tick down even 1/10 of a point, well, you got a chance the markets move higher. We'll see. That comes out before the market opens. You got American Airlines tomorrow, Archer Daniels, AutoNation, Colgate, Chevron, Goodyear Tires, Sony, ExxonMobil, and some other small ones as well. And that'll wrap up a busy week of earnings. Downgrades today. Xilinx downgraded. Win was upgraded. We didn't talk about Win. Win got an upgrade there. The stock basically moved a touch higher. It's been recovering little by little. So Win, something interesting there. And officially, that's all I have. Thanks for watching. I appreciate you guys being here. Check us out at Jazz Wealth. If you're one of our customers tonight, 8 o'clock, back to work for me. We're going to talk about where your orders go. Like if you buy and sell, specifically what happens. If you place a limit order, if you place a market order, how can you actually get paid for the orders that you place? And how do we do it here at Jazz Wealth with tens of thousands of orders a day? How do we make sure you get the best possible price for your individual positions, but also do it for free, right? How is it that we don't have to pay anything? So we'll cover that, and we'll cover how the exchanges work. And like I said, I've got maybe some old memorabilia I'll share with you and a quick story, and we'll be on your way. I always stay as long as you guys need to answer questions for customers, so I'll be back at 8 o'clock. Hope you enjoy, and that's all I got. See you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.